Hello, welcome to tax deed funding. It's the capital to help you, the tax deed investor, 10x your business. So let's get started. What are we going to talk about? Well, let's talk about what tax deed funding is. Most people have that question right off the bat. Who is tax deed funding for? How does it work? What qualifies? What does it cost? What are the requirements and the next steps? So what exactly is tax deed funding? Well, it's a way for investors like you to access equity in your tax deed before or after you have insurable title. This is not a loan or mortgage. It's 100% asset-based funding, so there's no credit check, that sort of thing. And the key is this is available during or after the redemption period. You don't have to wait 6 months in Texas or a year and a day in Georgia in order to access this capital. You can come to us immediately following the auction, and we'll provide you that capital back and go do it again. So who is the tax deed funding for? Well, any tax deed fund or investor with a winning strategy, but might be limited by cash. That's exactly who we want to work with. So would you like to 10x your available cash if you're in that situation? So how does this work? Well, the three simple steps, if we're going to break it down, is basically pre-qualification. It's just us making sure we want to work with you and vice versa. Again, we look at this as a capital partnership. And then there's the process of us funding you, which is repeated, right? Basically, you submit the property to us, we underwrite it, we agree, provide you the capital. You repeat that over and over until you've got 10 times the amount of assets compared to the capital that you have today. And then there's this third step, which is basically you as the investor acquiring that property back, at some point during the term, so that you can do what you need to, whether it not qualifies for traditional bank financing, whether you've sold it, whatever your disposition plan and strategy is. I guess in more detail, you as the investor, you still need to go to the auction, you purchase that tax deed with your own capital. Let's say you have $50,000 and you go to an auction, you spend $40,000 of it. Now, typically, you now have that one asset and you wait, right? If you don't have access to more capital, you can try to find one for the other $10,000 that you have, but in most cases you've got that one. Now, how our program is different, right? You went to the auction, you bought it for $40,000. You come to us, you press financing, we do our underwriting, and we agree you purchased correctly. So we give you that $40,000 back. Now you've got $50,000 again. You can go to the auction and do that again. Right now, you bought one for $45,000. You submit that for financing. We underwrite it. We agree. We give you $45,000 back. Now you've done that twice, right? You do that over and over until you have 10 times whatever the initial capital you had. So if you had 50,000, we allow you to do that until you have $500,000 worth of assets, tax deed assets you purchased. So we repeat that process over and over. Now down the road, whether that's the next day, 12 or up to 18 months down the road, at any point, you retain the option to purchase that property back. You don't have to wait a minimum of 3 months. You don't have to wait the full term. There's no prepayment penalty, anything like that. You can purchase it back, again, the next day or 18 months down the road, whatever the term length is. And then we do that process in reverse, right? You're providing the capital back to us, which is basically the same amount we provided you with interest if there is any, or if you've made payments along the way, there's no interest. You buy it back for the exact amount we purchased it for, and you move on, right? We do that over and over. Again, we want to be your capital partner over and over. We want this to be a multi-year relationship. So what are the timelines involved? Well, pre-qualification is very simple. When you get there, there's a video to watch, which is basically identical to this one. Without that, it takes probably 5 minutes to get through the application and get approval, typically within 24 hours. The funding process timeline, the underwriting right now is averaging about 5 to 10 business days. And then closing, which is a little more reliant on the title companies or that we're closing with. Right now, it's taking about 15 to 20 business days, but we've done it in as little as 5 business days following approval. Term lengths, I mentioned we will go up to 18 months. The shorter the term length, the better the rate. And so, we can shrink that up to 6 months if you just want a great rate and the ability to hold these short term. What qualifies? Well, single family homes certainly qualify, but we actually provide funding for other assets as well. Multifamily 5 unit plus type of assets, vacant land, commercial properties. The caveat to the last three, the multifamily, vacant land, and commercial, is the underwriting process, the timeline, and fees might be slightly different. For example, we do require a commercial appraisal on a commercial property, depending on the size, location, etc. Could determine the cost of that, which is a pass through, but it is a step in the process we require because each market's slightly different, and so we get a local commercial property appraiser to do that appraisal for us. So the advance rate, as far as what qualifies, now if you can get title insurance, right, whether we go through title certification or quiet title, we can provide up to 65% of the as is value. That's not as repaired value, that's the as is value. So what the status of the property is today, not what it would be after you complete a repair. If the property does not and cannot have title insurance at closing, in other words, if it's during the redemption period, then we'll provide you your purchase price back. Now, there's some caveats to that depending on the state. If you're in a state where the rates vary, then it may be slightly less than the purchase price. But the idea is if you purchase correctly, we'll give you exactly your dollar for dollar amount back, so you can repeat that process over and over. So we're currently in 12 states. We're in Michigan, Illinois, Indiana, Ohio, Pennsylvania, Maryland, Tennessee, Georgia, Florida, Mississippi, Arkansas, and Texas. But if you have assets or are looking to purchase assets in other states, don't be shy. We'll open up a state if we have a minimum of 500,000 of need in that state. So even if you don't have that total, if you submit your requests, we'll combine those, and as soon as we have a total of $500,000 in need, then we'll open up that state and can move forward. So don't be shy, even if you're not in these 12 states. Definitely reach out to us. What does it cost? Well, again, we consider ourselves a capital partner, and in general, we're way less expensive than a typical capital partner. We're structured slightly differently, right? But in a typical traditional capital partnership, right, they're providing you the cash, right? But they're also wanting most of that upside, for access to that cash, and usually that equates to over 50% interest, depending on your structure. Now, if you have a capital partnership where you're getting capital that at less than 15% of the cash that is blended in that structure, then you have an excellent structure. Quite frankly, I wouldn't be looking elsewhere other than a bank, right, where you get cash at great rates. But if you're paying more than 15% interest on the cash that's being utilized, then we can be an excellent resource. Now we want to be your capital partner for a fraction of that typical situation, and we want to be your capital partner for the long run. So we're looking for this to be a long-term relationship. What are the rates? Well, our rates can be as low as 12%. There's a few things that vary that, right? And whether you have insurable title or not insurable title, whether the term length is 6, 12, or 18 months, whether you're making a monthly payment or you're opting to defer that monthly payment, meaning no interest payments, just interest accrues, and there's like a balloon payment at the end. Those are options that we can work with, right? But that varies the effective rate. So definitely reach out to us after the application. We'll talk through those options, figure out what's best for you, and that's what will define your rate. So what are the requirements? Well, there's really just two basic requirements. One, you need to have successfully purchased a tax deed. So if this is your very first purchase, we're probably not the right source. If you purchased a tax deed already and you have a winning model, then you're exactly what we want to work with. The only other requirement is you need to have at least $10,000 in capital equity in tax deeds. For example, if you have, let's say $5,000 in cash in your account right now, and you've got $20,000 worth of tax deeds you've already purchased, technically we consider that $25,000 worth of equity and capital. And so you get access to 10 times that. You get access to $250,000, and you would qualify. So if you're in that bucket, you definitely qualify and can continue forward. What are the next steps? Well, that's it. If you want to apply, simply go to taxsaleresources.com/solutions. /financing and apply today. Good luck with your investments. We look forward to working with you.